Welcome to Tax File Special, a unique edition of our program where we spotlight industry trailblazers who are setting remarkable standards in their fields. This special edition promises to be both insightful and enlightening, an experience that informs and elevates your perspective. Stay tuned as we begin the new segment and then move on to the highlight of today's episode where Aderonke sits with our special guest for an exclusive interview. And now, the news. The Federal Inland Revenue Service, FIRS, has announced the introduction of a 10% withholding tax on interest earned from short-term securities. The measure marks a shift from previous policy where short-term investments were exempt from tax to encourage investor participation. Ejura Etu Opanachi reports.
Under the new directive, banks, stockbrokers, and other financial institutions are to begin deducting the tax at the point of payment on instruments such as treasury bills, corporate bonds, promissory notes, and bills of exchange. The move represents a departure from the previous policy, which had exempted short-term investment from taxation in order to encourage investor participation. FIRS Chairman Dr. Zach Adedeji explained that investors will receive tax credit for amounts withheld, except in cases where the deduction is considered final. He clarified that interest on federal government bonds remain exempt from the new rule. He urged all financial institutions to comply with the directive to avoid penalties as provided by the law.
The Presidential Fiscal Policy and Tax Reforms Committee, led by Taiwo Oyedele, has announced 50 new tax exemptions and reliefs set to begin on January 1, 2026. The reforms aims to ease the burden on low-income earners, support small businesses, and boost job creation. Swateku has the reports.
Under the new tax laws, those earning the national minimum wage or less will pay no personal income tax, while incomes up to 1.2 million yearly will also be tax-free. A new progressive pay structure will lower taxes for those earning up to 20 million naira per year. MSMEs and startups with turnover below 100 million naira will pay zero company income tax, and firms that raise salaries, offer transport support, or create new jobs will receive up to 50% tax deductions. Agricultural ventures get a 5-year tax holiday, and investors in certified startups will enjoy tax reliefs. Basic goods and services, including food, rent, healthcare, education, and agricultural inputs, will attract zero or no VAT, while small companies will not need to charge VAT at all. Experts describe the reforms as a major step towards simplifying Nigeria's tax system, promoting fairness, and driving inclusive economic growth.
Tax expenditure has been described as monies government forgoes by giving tax incentives to companies. These incentives or waivers need to be documented, managed, and reported so that the government is aware of how much it is spending and how effective this expenditure is. This explanation was handed by the Coordinating Director, Corporate Services Group, Mrs. Bolaji Akintola, Head Tax Expenditure Management, Mr. John Ikata, and Mrs. Juliana Iremi in their presentations during the just concluded tax expenditure workshop held in Ibadan, the Oyo State capital. Mariam Jode Adura reports that the exercise is designed to educate and enlighten staff of tax offices in the region on how to properly document, transmit tax expenditure information using the special purposed reporting template to ensure the credibility of data being generated.
During the 2-day tax expenditure sensitization exercise for Oyo, Ogun, and Osun states, the coordinating director, Mrs. Bolaji Akintola, while welcoming participants, explained that tax expenditure management helps to justify incentives, strengthens transparency in revenue administration, and drives better fiscal decision making. Ensuring its actual documentation and reporting is in essence a strategic tool for revenue governance. Juliana Erieme, reiterating that data is life, maintained that the importance of accurate data cannot be overemphasized in tax expenditure reporting. Head Tax Expenditure, Mr. John Ikata, called on the tax controllers and heads of offices to ensure that the proper record is kept in order for the incentives to be measured and quantified. The sensitization exercise is expected to take place in all coordinations within the service to create awareness on tax expenditure and how to standardize its reporting processes.
Welcome back to Tax File Special. This is our exclusive interview segment where we bring you insights from the experts shaping tax policy and administration in Nigeria. Today, we have a very special guest, the Chairman, Presidential Committee on Fiscal Policy and Tax Reforms in Nigeria, Professor Taiwo Oyedele. Get ready for an enlightening conversation packed with expert perspectives on tax administration, compliance, and policy direction. Let's get started. Good day, sir.
Good day.
How are you doing today?
I'm doing great. And
Thank you so much for having us. I'm doing very well.
It's a pleasure.
So how's the preparation ahead of the transition into the Nigerian Revenue Service? We all know that by January 1st, 2026, the transition will take full effect. So what are the plans and what do we look forward to?
Yeah, thank you very much for asking. It's been a very interesting journey trying to implement these reforms. Mr. President had mandated that we shouldn't just come up with ideas, but we need to work with the government to implement, which is why we have been quite busy with engagement with stakeholders, and the FRS, soon to be Nigerian Revenue Service, has been a very willing institution in the whole journey. So we commend the FRS for that. So the transition from FRS to NRS is very strategic. One, we wanted the name of the organization to be reflective of its important role. That important role is that it is not the agency of the federal government, it is for the federation. That's why most, if not all, of the taxes collected by the FRS go into federation account, VAT, petroleum profit tax, corporate income tax, and they are shared by all three levels of government. So we believe that there should be a name that is reflective of the function of the FRS. Beyond that, it also means that we have the opportunity for harmonization. One of the things that Mr. President mentioned on day one during his inauguration was the need for us to tackle multiplicity of taxes. It has been around for as long as I have been an adult, maybe even longer,
Yeah.
and it seemed to even get worse with time. This is the first time that Nigeria as a country is being decisive in addressing it. So the NRS is at the center of that harmonization, ensuring that revenues belonging to the federation and even levies and taxes belonging to the federal government are centralized within the Nigerian Revenue Service, who will then collaborate with revenue agencies from the sub-national level. This would also help us with positioning such that when we get to the international stage, if you think about different countries, South African Revenue Service, Kenya Revenue, so we're the exception, so we're aligning, and there's also an improvement in the governance structure, which will help us improve the social contract. So essentially, it's an exciting time for us. We're looking forward to it.
I'm also looking forward to it. I think every Nigerian should be looking forward to the Nigerian Revenue Service. Thank you so much for that.
You're welcome.
One of the popular questions that Nigerians are asking is that, for example, if you are leaving a job and you got a huge severance package, will you be taxed on that?
No and yes. So of course, nobody wants to lose their jobs. Different from the terms they agreed at the beginning, which is usually retirement. In fact, we've seen instances where people are getting to age 60 and they panic because they don't want to retire.
Yeah.
So you can then imagine if for whatever reasons, either because of reorganization, redundancy, people are laid off when they have not attained the age of retirement. Usually organizations will give them some payoff so they can settle down and cater for their needs. So what the government has done is to raise the exemption threshold, which is currently before the end of December 31st at 10 million naira. That amount under the new law from January next year goes up to 50 million. So if the person is paid up to 50 million, no tax at all. If they are paid 70 million, they pay tax only on the excess of 20 million. So of course, if there are people who are paid off, in billions of naira. So the more the amount you're paid, over and above 50 million, then the more likely the amount of tax you will pay, based on your income tax profile.
Thank you so much for that clarity. I think by now Nigerians should be, well informed. Then going to my next questions. If I earn dividends abroad, will Nigeria tax me?
No, the answer is no. So we're trying to encourage investors out of Nigeria who have investment abroad to bring the money back home. So if you have investment abroad, of course, if you buy shares, you earn dividend. If you buy bonds or fixed securities, you earn interest. You may also have properties and you earn rent. So all this passive income is income you earn where you don't have to go to work every day to earn it. If you earn that abroad and you bring it in to Nigeria through authorized channel, that's any channel approved by the Central Bank of Nigeria, then that is totally tax-free.
Yeah, so going to my next questions. For example, let's say my uncle wants to start an agriculture company next year. Will his company be taxed in Nigeria?
You know that Nigeria's economy in terms of the structure, we're still heavily dependent on agriculture. If you disaggregate the sectors of the economy, it's still the largest employer. It also provides very important input into manufacturing. Of course, it also feeds our people. So we have been intentional in this tax reform to provide all manners of incentives to the agri sector. So if anybody starts an agri business, the first 5 years they will not pay tax. In addition to that, there is an economic development incentive that has different subsectors within the agri business that can enjoy incentives of up to 10 years. In addition to that, we also have zero rating of food. We never had that in Nigeria before. What it means is if you produce food item or anything within the agri system, you will not charge VAT, or put differently, you charge VAT at 0% on your output, and any VAT you may have incurred in producing those items, you get the refund from the government. Of course, I have to say that a lot of the inputs that goes into agri, from agri equipment to fertilizers to seedling, already have no VAT. But you find that a farmer, might have a car. So we can't exempt cars from VAT because people can buy it for other things, not only agri. You have a phone, you buy airtime, it has VAT. All those other VAT that are not agri specific, but that a farmer or someone in agri business has incurred in producing whatever it is that they produce, from January next year, they will get a refund. So this is the best time to be a farmer. Produce, make money. We want our farmers to be very rich, actually, and start exporting.
Okay, so it's good to know that. I think by next year I will go back to my village to
Even me too, I'm thinking of
so that I will not have to pay tax.
I'm thinking
like
of
there's a
that
popular
as well.
saying that nobody wants to pay tax.
Yeah.
But if you know you don't want to pay tax, better start farming.
Yeah,
right?
do some planning. There's an opportunity for you to do activities that government is trying to encourage. Make money and not pay tax in the process because you're exempted.
Yeah. So income from federal or state bonds, are they taxable?
No. So before the current tax reform, we used to have only the federal government bond being exempted from tax. Part of the reform is we wanted to enhance fiscal federalism and also fiscal equity. So we said, if the federal government can issue bonds and is not taxable, why is the state one, taxable? So from January next year, bonds issued by the state government will no longer be taxable.
What does rent relief entail under the new tax law?
Thank you very much. So under the old tax law, which is coming to an end very soon, we used to have a very complicated way of determining your tax payable. So if you earn gross income of 1 million, you need to think about deductions, relief, allowances, and so many things. So we said, why can't we solve both problems? One, reduce the taxes that people pay, and two, simplify how they determine how much they need to pay if they are not exempted. So in that process, we have designed a tax band and rate that incorporates all the reliefs and allowances that people were getting before, such that you just take your gross income, maybe 1 or 2 deductions, and then you can get the amount of tax you need to pay. We retained, or we introduced, I should say, a rent relief. Now, this rent relief, you can enjoy up to 500,000 naira. That's the maximum. And people said, oh, don't they know that rent is very expensive? In Abuja, it's 10 million. In Lagos, it's 12 million. And we said, actually, the rent relief that we have in the new tax law is not targeting people who pay 10 million naira rent. It's targeting the low-income earners. So how do you help this person who is in the urban center and struggling? So we thought one way to help them is to provide that rent relief. Because if you live in Lagos or Abuja or Kano or Port Harcourt, you pay rent. Some of them, they share a room and they're paying 300K, 200K. Those are the people government want to help primarily. So they can then get a relief up to 20% of the tax of the rent that they pay to reduce the tax that they will pay. So that that person earning the same amount of salary in the city gets more take-home pay than their friend who earns the same amount in the village, reflecting the relative higher cost of living for the person in the city.
So how will it work? How will it work, sir?
So the way to work is, whatever rent you pay, you need to have an evidence. So you can't go to the taxman and say, trust me, I paid rent. Even if it's just a bank transfer or receipt, whenever you pay rent, collect evidence. So based on that evidence, whatever it is that is acceptable, 20% of the amount that you pay as rent is your relief. What that means is you take it out of your gross income before tax is calculated. But by the way, if you earn about 100,000 naira per month, you won't even pay any PAYE under the new reform, because you get a lot of deductions like pension contribution, National Housing Fund, National Health Insurance Scheme, mortgage interest if you have, and life policy. You take all of that out. You take out rent relief. Before you know it, the money is less than 800,000, and that is fully exempted under the new law.
Okay, thank you so much for this. I'm sure a lot of people nobody will be praying to earn, 100,000 naira anyway. But there's nothing we can do about that. So people will say,
it's
that.
the reality of life.
Yes.
In America, if you have $10 or its equivalent, which is just about 15,000 naira, in your pocket or your bank account, you are richer than the bottom 15 million Americans. That's almost the size of a country.
Wow.
Combined, all of them combined, don't own $10. They live on credit. Because of the shutdown in the US, even working class are now queuing up for food stamp. So there's no country in the world where everybody will be rich. The role of society and of government is to ensure that our most vulnerable can still meet their basic needs. That is why in this new tax law, there's the intentionality to make that happen. One, increasing the disposable income of the average Nigerian and bringing down the prices and costs of the basic consumption, from food to education, health, accommodation, and transportation.
All right, thank you so much for that clarity, sir. So now, I want to talk about what people have been, especially business owners, have been asking. There are so many questions. I'm sure you also receive this on daily basis.
A lot.
Someone who owns a company with a turnover of 50 million naira, will that person pay tax?
Yeah, thank you for asking, because this is one of the most frequently asked question or clarification. So we have 4 tax laws. One is Nigerian Tax Act, one is Nigerian Tax Administration Act. So let me focus on those 2. In the Nigerian Tax Act, it defines a small company as a company with turnover of 50 million, net assets not more than 250 million. In the Nigerian Tax Administration Act, it defines a small business as having turnover of 100 million, not exceeding 250 million assets. So there's a conflict or inconsistency between the definition of a small company in the Nigerian Tax Act and a small business in the Nigerian Tax Administration Act. From a policy point of view, the intention is to make it 100 million in both acts. And it was this 100 million that the National Assembly passed and harmonized at the final stage of passing the bill, and in the clean copy that was sent to Mr. President for assent. But because when the original bills were submitted, it had 50-50. So it was the editing problem that led to the final gazette having 50 in one and 100 million in the other. So what we are working now on, because the law, the new tax laws, empower the finance minister to issue regulation generally to implement the law, including where we find inconsistency. You would agree with me that under the current law, a business that earns between 25 million and 100 million is defined as a medium-sized company, and they pay a lower corporate tax rate of 20%. If we don't address this problem and define a small company to be that which earns 50 million, which means once you earn more than 50 million, you're not a small business. We're going to punish companies that are earning between 50 and 100 million because they currently pay a lower rate. They'll be paying higher rates under the new reform. That would be the opposite of what we promise, that the burden of tax on businesses will not increase, particularly those small businesses. Bear in mind also that when the 25 million threshold was introduced for small businesses and 25 to 100 million for medium-sized businesses, Naira was stronger. Exchange rate was stronger. So relatively, we should not, in all fairness, because we need to earn the trust of the people. So this is one area where we're going to be issuing guidelines to clarify what is applicable so nobody is confused.
Thank you so much for having us today, sir.
My pleasure.
We are very grateful, and thank you for the clarity made. And I believe Nigerians by now will be educated on the new tax law. And we hope to see you another time. Thank you.
It will be my pleasure.
Thank you,
Thank
sir.
you very much.
Indeed, that was a valuable conversation with the chairman, Presidential Committee on Fiscal Policy and Tax Reforms in Nigeria. We hope you gained useful insights into how taxes are managed, how compliance is enforced, the transitioning to the Nigeria Revenue Service, and how these areas are going to evolve the economy for good. A big thank you to our guests for joining us and sharing such valuable insights. We hope you found the conversation as inspiring as we did. See you next time.
That was indeed an enlightening conversation. We hope you found today's special edition both informative and inspiring. Remember, TaxFile is your trusted source for news, analysis, and conversations that deepen your understanding of taxation and national development. Join us again next time for another episode that informs, educates, and empowers. Until then, I am Lowry Bala Hassan, saying thank you for watching. FIRS, simplifying tax, maximizing revenue.